Mm. We've been seeing some market strangeness. Welcome back to Stock Indices. It's your host, it's your CEO, it's your trading options guru, Kenneth Beard. I'm not a guru, I'm just a guy who's just bored, so he makes YouTube videos to spread his knowledge. But today, we're going to go over some weird things that have been taking place in the market. Now, I have currently in my portfolio, I had a lot of short positions, and I still believe the market has not bottomed. Now, we're going to talk about everything that's going on when it comes to economic data, when it comes to price level in zones, where we're looking at the demand and supply. Where is it coming from? We're going to talk about sectors. We're just going to talk about overall market sentiment. So let's hop straight into it. First things first, today we had some very volatile economic data that came out. And that data was the jobs reports, right? So um, yesterday we didn't see much because we only had the balance of trade. Sorry if I'm like really close. I don't have my contacts in. So let me rub my eyes. All right. All right, guys, we're ready. Yesterday, Thursday, we had the initial jobs claims. We had exports, imports, the balance of trade. We can see yesterday the balance of trade expanding. So the balance of trade is starting to go more in the positive zone because we're seeing more exports than imports. And that's why you see the positive balance of trade versus the previous. And you can see that we did miss on the consensus, but overall, the data comes out. We're still beating on the balance of trade. So we're still beating the previous numbers on the balance of trade. So we see expansion on the trade side of the U.S. And not only that, we got non-farm payrolls, unemployment rates. We had that today, and so let's refresh because it hasn't loaded up the data here. All right, here we go. Non-farm payrolls came in at 336,000, previously 227,000. That's a big jump. That's $100,000 non-farm payroll jump almost. We have unemployment rates staying the same. Then we got average hourly earnings month over month staying the same. So, that doesn't really matter. What matters the most is those non-farm payrolls. Why isn't the labor market cooling down in that retrospect? More job openings, more jobs, period. Right? We want that number to slow down, and then also the unemployment rate is jumping. So it's almost like the people don't even need the jobs for whatever reason. For whatever reason, the people don't even need the jobs. Um, the participation rate is staying the same. So, like I said, people these non-farm payrolls are are jumping like crazy, but unemployment is staying the same. So my whole thing is right with this. So basically, like looking at these unemployment numbers, you can see the unemployment numbers are like the highest they've been ever. It's like people are still actively looking for jobs. People are still actively needing jobs, and the number of people needing jobs are going up, and the number of people working is also going up. So the labor market does not seem like it wants to cool. It doesn't, which is going to affect the dollar, which is going to affect the bonds. More people in the labor force, expanding labor force is going to make yields go up regardless. So that's my next point here that I want to speak on. Okay, I got absolutely wrecked in Walmart. I did. I was in Walmart, put credit spreads, and I'm wrecked. I got wrecked. But it is what it is. You know what I'm saying? I woke up and I didn't have connection this morning when I was trying to get onto my brokerage account. So I didn't get on my broker and see my P&L or anything like that until like 9:45, 9:50. Not that long after the market's already been open. I mean, most of the volatility happens that early in the morning, but still, I wouldn't expect a move like this that early on. And that's essentially what we got. I was down 400%, completely out of my hands. I don't use stop losses, guys. So when these things go down, if I'm not there to witness it, so I don't know if I'll equip stop losses from here on out because something like this is just unacceptable. Something like this is unacceptable. I can't do anything about it. I kind of was already getting the feeling that maybe this could happen, because we got the breakdown of the trend. We have to rally up into the resistance. This is usually what you'd be looking for if you're a short on this play. But my thought process was okay, maybe, we have enough strength, to regroup and regain, you know, above the resistance. We didn't. We certainly did not. And my Q should have been like right here to maybe start looking to get out. Except like I wasn't near my 200% max loss yet. So I might have to equip something in my strategy where it's like, even if we're not at 200% max loss, if we get a clear break of trend, which shows that short interest is going to step in, just close the trade early, cut the loss early. So I think that's something I'm going to start implementing into my trade. Matter of fact, I don't even think about it. Look at the volume on that. Like, geez. Perfect downside play. If I were to catch that with puts or something like that, wow, dude, that would have been an amazing effing trade, dude. That would have been an amazing effing trade. We got bounced right off the 200 SMA, and we seen a really big rally midday, which is cool. We gave back a lot of that pain, but I wasn't in for it. I exited at the very bottom. So it is what it is. Walmart were leaving in the past, took the loss, but um, here we are here. We are here. We are here. Here we are here. Here we are here. Look at the volume on this. Very strong volume on this up candle. Job market is expanding. We want a cool down of the labor force so we can lower interest rates, right? Or am I wrong? Am I wrong on that? I think I'm right. So I don't believe this. People may buy into this. I don't believe it yet. I'm not going to stay married to any one idea, but I am short the Qs and I am short heavy on the Qs. I have like $1,000 in this thing, bro. I have like 4 contracts. I can show you the trade. I'm already down a lot on it. Not that much. I'm over exaggerating, guys, but I'm still down on it. It's not fun ever being wrong. You don't want to be wrong. You want to make money. You don't want to lose a lot of money. I knew the risk that I was taking before I got into this. Okay. So I'm looking at the data. The data is showing one thing. The data is showing the bonds breached 5% today. The data is showing, I took a pretty big loss. I was up to 3,500 just a few days ago. Now I liquidated all my positions and I have 3 positions left. Nike's another one that's messing me up. We're gonna go over that again too. But yeah, just the meta trade's not too concerning to me. I'm not gonna lie. Meta's not too concerning. Nike, Not too concerning. But yeah, Qs, I'm down $160 right now in the Qs, and I just opened up that position right after taking a Walmart loss. I opened up three extra contracts on the Qs. I'm gonna look. I have until the 27th of October. I have a long time, and my short strike isn't all the way up to up here. Now, looking at where we're sitting at right now, we could rally another day, and it could put me. What am I down? I am down 96% of the max of the credit. It could put me down to a lot if it rallies another day. But if we break out of this upwards resistance here, or if we break above the 20, and that just seems like they're not even doing anything as far as to cause some sort of overhead resistance, I'm going to get out of this early. I'm going to try to cut at like 140, 150%. I don't really want to see that too. Okay, if I see the whole 200% loss, it's just going to be a losing month again. It's going to be another losing month, and there's nothing I can do about it. I got to just learn from it, and I got to just retry again. You know what I'm saying? It's just going to be another losing month. I can make adjustments when it comes to risk management, as far as maybe implementing stops at like maybe 210% of the max credit, so it doesn't get lagged out. The reason why I don't like stop losses is because they can be filled unwillingly at prices that you don't want them to get filled at. You know what I'm saying? So that's just the whole thing. But what can we say? We had a huge rally today. Doesn't look good to the short side, even though I'm short biased right now. It looks like that 354 level on the Qs is what's holding it up right now. We chopped sideways. Now we're breaking up towards the upside, right into the 20 and 50-day SMAs. If that can't act as some resistance, I don't know what will. And it's really concerning to me because it doesn't make sense. I can't really make sense of this because the data is showing us that interest rates will be hiked. So that's why I'm held on to the fact that I believe certainly that more volatility is to come. We have Federal Jerome Powell speaking at the end of October. We have um, some stuff going on. Let's look. Let's look here. Let's see. We're just gonna go to the most important. Okay, October 11th, we got the PPI, the FOMC minutes. That is going to be a little bit of an indication of where they're going, where they're heading with interest rates. The 11th is next Wednesday. Come on now. The 12th, we got core inflation. We got inflation numbers, which the consensus on the inflation numbers month over month is 3%. And the consensus, they're looking at inflation to drop by 0.2%. It's crazy when the market, we want the market to get better, but it doesn't make sense to me of where they can get that consensus from. I think that if that consensus on inflation beats year after year, consensus is 4.1%, previously was 4.3%. I don't think it's going to come at 4.1%. Where's inflation right now? Let's see. So the 13th, inflation has been dropping. Inflation has been dropping. That's making me think how that's going to play out with inflation dropping. Sorry for that little pause. It just made me think because if inflation is dropping like that, they might be less. Um, they might be less conducive of raising of hiking rates again. You never know. So yeah, we have inflation data coming out the 12th, which could cause volatility. We got the consumer sentiment that's going to cause volatility on the 13th. Next week is going to be a very volatile week. That is just why the only reason I can think to go short of the market. I don't think it's it. Now, the bonds, if they flatline and these inflation numbers make the bonds rally, and hikes, slow down potentially from the minutes. Maybe we do rally from here, and I'm completely wrong, and I lose $200 again, and we call it a day. We're rallying, we're selling, and now I can take those long, easy trades and make the money back in the next 5 months to a year. My goal is to at least make 40 to 50% this year. My goal is 50% this year. It's a struggle. I'm not gonna lie. These markets are very volatile. They're very random. Stocks are all over the place. It's difficult to trade in these markets. I'm not gonna lie, but I'm sticking through. I'm not terribly. I'm not net negative on the year. I might be now. I might be losing money on the year. I'm not gonna lie. After that loss on the so I'm negative on the year. I'm down 2% yearly. So completely went into the red zone. And you just have to wing. We have to stick it out. You know what I'm saying? We have to stick it out. And in times like this, you just got to be able to make smart decisions. So that is that. I'm not gonna let this bog me down too much. We're gonna continue to do what we do. We're gonna continue to study. We're gonna continue to learn. We're gonna continue to have knowledge. We're gonna continue to get better and learn from these mistakes. Maybe I should start setting stops. Maybe I should just go in all my stocks, set 200% stops, so when I'm not there, they just execute. Maybe I should do that. I'm going to test that out. And if that theory works, you guys will know because I'll keep you updated on everything. But as of right now, I'm not too worried about everything like that. Like I said, if I do lose on the Qs and we rally to the moon and I get logged out, it won't be the end for my trading account. Trust me. I'll just cut the loss, take it. I'm still confident within my meta trade that, I can focus on what is working right now. And I know what is working is meta. Meta is still working. Even though we're getting a little bit of a bounce here, but nothing too crazy. Meta is still it's slowly doing its thing. So I'm confident that Meta is going to stay. Obviously volume is going up a little bit, so they're favoring the upsides alongside with the market. The market's taking everything up. Everything is the market. It's like I kind of have to think to myself, like, why do I even bother trading other names? But I could just trade the Qs or the SPYs or SPX. And I like trading other names just because not everything's the same. I couldn't do an iron condor in the Qs right now. Well, I probably could, but I couldn't do an iron condor as well as I could on a setup like this versus another stock or another name. So that's why I choose to diversify it. But that's what happened today. And I'll keep you guys updated on everything. Like I said, we got a very busy week next week. I'm probably make a video every single day. I'm gonna try at least. And so stay up. I don't even know, but I'll see you guys in the next one. Welcome to Stock in the Seats, and I'll see you all soon. Thank you for tuning in.